Hello. Welcome to our next IND AS, that is IND AS 8, that is accounting policies, changes in estimates and errors. So सबसे पहले we'll understand all three of them individually. Very small IND AS, not very important. So first is, what is your accounting policy? Accounting policies are your specific principles, basis, conventions, rules that are applied to the entity while preparing your financial statements. Example, whether to use while valuing your inventory, whether to use FIFO or weighted average, whether you do cash method of books of accounts or you do accrual method, or whether you do cost model of assets or revaluation models. These are all your accounting policies. Now, accounting policies must be applied consistently to each categories. For example, your PPE has four categories: land, building. PP has four categories, that is land, building, plant and machinery, and furniture. Now, entity can choose to apply revaluation method to land and cost method for others. So that means within these four categories, they are free to choose that one I can put at cost and other that revaluation, or vice versa, whichever way it is. Next, any change in accounting policy shall be applied retrospectively. When we say retrospectively, means if we are changing the accounting policy today, then in such a case, this we have to restate our financial statements assuming this had done from the beginning of time. So therefore, it says applied retrospectively unless specific transition provision exists. If there's a transition provision that you can do it from today, then it will be prospectively. Otherwise, it is from retrospectively. Next comes your accounting estimate. So accounting estimate is judgment based on your latest available and reliable information, that is you are estimating. So for example, you will have to make a bad debt provision. What will be the useful life of an asset? What will be the residual value? What method of depreciation do I use? Do I use SLM? Do I use WDV, etc.? So any reason for change in estimate, whenever you have to do a change in estimate, it is only allowed if there is any new information, or there is now more experience, or there are any new developments that have happened based on the assumption that you have taken. Any change in accounting estimate shall be applied prospectively. So if you see, this has to be applied retrospectively and this has to be applied prospectively. Okay. Now coming to our last part, that is your errors. So errors are omissions and misstatements in the entity's financial statements for one or more prior periods. That is omission. That means you missed doing something, and misstatement is you did it wrong. So this is you didn't do at all, and this is misstatement means you did a wrong thing in the entity's financial statements for one or more prior periods, or failure to use or misuse reliable information. So all these errors discovered shall be corrected retrospectively. Okay. So our first, if you see, our accounting policy is corrected retrospective, in fact applied retrospectively. Our accounting estimate is applied prospectively, and errors are applied retrospectively. So what are the types? First is the mathematical mistakes, that is you added subtraction wrong. Next is your mistakes in applying accounting policy. Next is misinterpretation of fact, that means you understood them wrong. Fourth is your omission, that is you missed something. And last is your frauds, that is willful misstatement or omission. And with this, we are done with our chapter. I will see you in the next one, that is IND AS 10 events after reporting period.